Wednesday, September 25th, 2019, Maneco 64, home of alternative economics and contrarian views. Yes, I could talk about the political situation both in the US and in the UK, but I'm not, because you can get that kind of information from elsewhere, and that's not what I focus on. One thing I would say though, it's more and more divide and conquer, right? Divide and rule, both in both countries as it relates to impeachment and as it relates to Brexit and Trump and Boris Johnson. I want to focus on something that hopefully will help you financially in these troubling times, and that's look at the real problem nowadays, and that's debt, global debt, how it's reaching unseen levels in peacetime. I'll look at an article from the FT, came out 4 hours ago. Global debt surges to highest level in peacetime. If that's not worrying, I don't know what is. So you can see how interest rates are so important nowadays. And they'll probably keep going lower. But at the same time, we've seen how volatile interest rates have been. And with the amount of debt in the world, that causes a lot of trouble in the real world in terms of companies going bust. And I want to talk about that as well, because I've seen that one of the challenger banks, they call in the UK, they're relatively new banks created after the crisis of '08. Metro Bank is again in trouble. I'll talk about that as well. And I want to talk about also the fact that Thomas Cook is going into administration, and who were the people that pulled the funding from them. And that's, I think, in my opinion, all related to what's happening in the repo market. I think it was Warren Buffett who said, when the tide recedes, the credit tide recedes, we can see who's swimming naked, and that's what's happening right now. So let's stay on these subjects, and again, I'll cover the markets towards the end of my video. So let's start with the FT article. It says global debt surges to highest level in peacetime. World's major economies have debts on average of more than 70% of GDP. Global debt at its highest level in peacetime. Median debt to GDP percentage of a 12-country sample. So as you can see there, the highest level, World War II was the only time where it was higher, right? So highest level in peacetime. That's how it used to be, or has been the last 300 years. When countries have to go to war, they take on a lot of debt. A lot of times they went off the gold standard. But after the war was over, they went back to normal, paid off their debt, and things stabilized again. But since World War II, that happened as well. As you can see from this chart, debts were paid off, relative terms. But since the fall of Bretton Woods, and since the world went off the gold exchange system that Bretton Woods was, debt has been going up and up and up. Yeah, of course, there have been non-ending wars by the military-industrial complex, but no major wars, right? But it's not normal what we're getting now. So let's have a look at the article. It says the level of government debt around the world has ballooned since the financial crisis, reaching levels never seen before during peacetime. Why has that happened? Well, because the financial crisis put this current fiat currency monetary system under threat. The system is backed by government debt, right? So the more government debt you create, the more money in the system. As the system was imploding in '08. And why was it imploding? Well, because a bunch of Wall Street and City of London and Frankfurt banks, they leveraged too much, took wrong bets, so did consumers, some consumers, but mostly the banks through derivatives. So governments said, well, let's bail these banks out because everything's going to implode. So they created more and more debt to keep these bankers going. They could have let them go bust, and they should have. It wouldn't. We could have reorganized the system very easily. But what they did is they threw everything at these bankers. You probably remember Hank Paulson on his knees begging Nancy Pelosi for a bailout, right, for Wall Street. So that's what's happened. That's why the debt's gone up. And that's why they've had to do QE to keep the debt levels, the debt prices elevated, to keep rates low so they can carry this debt. This has all been done for the bankers and the financial system. Wall Street, City of London. It hasn't been to help the world. If anything, it's indebted us, our children, their children, and their children too. So what's the way out? Well, the collapse of this is the way out. It will be painful. But anyway, that's why the debt has ballooned. A Deutsche Bank analysis shows the world's major economies, well, at least they're still doing some analysis, Deutsche Bank, shows the world's major economies have debts on average of more than 70% of GDP, the highest level of the past 150 years, except for a spike around the Second World War, raising profound questions about the sustainability of the global debt pile. Unlike earlier eras, when governments typically ran surpluses during peacetime, the pressures of modern democracy and welfare systems have made persistent deficits the norm in many countries, what I was talking about earlier, right? Meanwhile, anyone hoping for a repeat of the great deleveraging from 1945 to 1980, when the national debt to GDP ratios of UK, France, Japan, Austria, Australia, and Canada fell by more than 100 percentage points, could be in for a disappointment. And I quote Deutsche Bank's Jim Reed, "The problem in sustainably recreating such a scenario today is that the post-World War II era saw much higher levels of GDP growth due to favorable demographics, post-war reconstruction, and high productivity growth," said Deutsche Bank's Jim Reed. Yeah, I mean, they never talk about the fact that we were on a fairly sound monetary system, right? Where there was a limit to how much debt you create. Never talk about that. I agree a little bit with the demographics, but anyway, Mr. Reed argues we are likely to see central banks continue market interventions that have enabled governments to take on more debt since the crisis, perhaps even financing spending directly with so-called helicopter money. He says we are actually not a million miles away from this. By their aggressive actions over the last decade, central banks have effectively trapped themselves into continually intervening in government bond markets. They're arguably beyond the point of no return. Yeah, they did that, Jim Reed, to keep your bank going, right? Interesting that you don't talk about that because, you know, institutions like you acted irresponsibly in the market. You gambled with taxpayers' money. That's why they're doing it. Is helicopter money, or which is basically MMT, is that possible? Yeah, it's possible, and that's why I am holding on to my precious metals, physical gold. That's the only way to protect yourself, and also silver, of course. So there you go. That's the real crisis in the world right now. It's not impeachment or Brexit. That's the real crisis. Of course, the general public is going to, of course, be distracted unless you have an account with Metrobank. I just got a message this morning from a friend at the golf club saying he's concerned. He's going on holiday next week, and on Sunday, I think, for a week, and one of his wife's friends contacted him and said that Metrobank is going to go bust. He has quite quite a bit of money there. He's got money in different accounts with his wife. So he's protected though by the FSCS. There is an £85,000 protection for money in a bank. So the government will guarantee that. So I told him that, and he said, "Oh, thank you. I'm a little less nervous now." And I said, "It might take a while for you to get that money if they do go bust." He said, "Oh, I'm not concerned about that." I talked to him about sovereigns, gold, and he said, "Yeah, I might have to look into that." And I had a friend also from the golf club over 6 months ago when these troubles started at Metro Bank. I think they started last year already. He also has some bonds with Metro Bank, but they seem to also be guaranteed. I recommended him to get sovereigns or gold, and this was over 6, maybe 9 months ago. I bet you he probably didn't get any. He would have been a pretty happy camper right now. So yeah, Metro Bank is one of the banks that's been created after the financial crisis. It was created by an American private equity guy. It's a very friendly bank. You can take your dog in that bank. They've got bowls of water, and they give your dog treats. Very friendly. But as you can see here, since late last year, the share price has basically been on the way down. It got up to 40 pounds, and it's now, as you see there, 184, which is pence or cents. That's £1.84. So it's completely collapsed. You can see here in the last day or so, it's gapped down. And why has this happened? Well, there were problems with their reporting of their loans over a year ago now, or around a year ago. I'm not sure exactly when. They basically didn't report their loans properly, so overstated their assets, something like that. The CEO has resigned since then, but you can see there that the market doesn't buy it. And you've had Thomas Cook as well go into administration. And I read that RBS, their banker, and Lloyd's could not roll their funding, £200 million funding. And you look at what's happening in the repo market with funding, and you kind of wonder, are there a lot more Thomas Cooks, Metro Banks out there? And I think there probably is. And that's why the Fed has had to come in and start intervening in the repo market. Repo market is just basically a market that funds Wall Street banks, City of London banks in their overnight operations. They use treasuries as collateral, and that affects the whole chain, because these Wall Street banks, City of London banks, they finance other businesses like Metro Bank and Thomas Cook. So I think this is a big problem out there, and we need to keep an eye on this. So Metro Bank. Let's look at the markets then. It's around 8:30 a.m. London time. So let's see where we are at the moment. We've got spot gold down just over $1.60 at 15.30. Range has been 15.27 to 15.35. So gold has continued to move higher. Silver has taken a breather since Monday, I guess, when it outperformed gold quite a lot. So right now silver is at 18.52, down about 6 cents. High has been 18.70 and the low 18.45. The Dow is up 30, 26,846, up slightly. S&P future is up less than a point at 29.68. NASDAQ 100 future is down 4.5 points. Yesterday, of course, the Dow was down 0.5%. S&P was down over 0.75%, down 25 points. and the NASDAQ was down 1.5%. So stock market not looking great at the moment. It's still at elevated levels. What about the currencies here? We've got cable or sterling down 1/3% at 124.46. Euro is down 1/4%, just below 110. And the dollar is up 1/4% against the yen, 107.30. And the dollar's up 1/4 against the yuan as well at 712. So the dollar is stronger this morning, and in spite of that, precious metals are holding quite steady. Crude oil down 1%, WTI 56.67. Brent down 1.2% at 61.50. Let's finish off with the bond market with a 10-year yield. We are at 164. The 2-year is at 162. So almost becoming, how can I say, flat, the curve there. We were about 8 basis points positive or normal sloping a few days ago, and now it's flattening again. It could go inverted again. We need to keep an eye on this. One thing I would say, there's still a lot of volatility in the bond market. This whole month of September, we've had a move from around 140, that was roughly the low in the 10-year yield, to 190, and now we're back to 164. And I can tell you that's very, very volatile in the bond markets. I worked in the bond markets for over 20 years. There you go. Yes, keep an eye out on all the political distractions if you want, but make sure you keep an even closer eye on the global debt situation, global credit market situation. I think it's starting to show some real big cracks out there. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.